I would like to see how you use like the VWAP and the Anchored VWAP in relation to earnings gaps, I guess.
Yeah, so DT is a good example, Dynatrace. These guys reported earnings over here, and that was that gap. So as soon as I see something that changes the sentiment, a big shift in the psychology of the market, I want to anchor from there. So you can see what happened is, first of all, it got above this purple line. And you might be looking at going, well, what is that? Well, that's the anchored volume weighted average price from the all-time high. So it rallied up through that, and now it's kind of just, ping ponging back and forth. This blue line is the anchored VWAP from that event. So when I look at it on a 15-minute time frame, here's the way I see it: is we initially got that gap, it got above the volume weighted average price from that gap, and then the sellers took control. The sellers took control here, they defended it, and it's still below that.
Did you anchor that from the close of the day or from where it gapped up that morning?
From that morning, from the very beginning of trading. Now, if you
Gotcha.
really wanted to be super accurate, you would go back and look at the post market data as well for
Okay.
this software, because it does, as we know, it doesn't just gap there; it
Right.
trades there in the after hours. But by this point, that after hours volume is most likely very insignificant. That it's going to be in generally the same area. So even if we anchor one to the close of that day, the prior day, you can see they converge together. As you get
Hmm.
more data, they converge together.